Welcome back to the Dividend Diplomats YouTube channel, everybody. Got the Dividend Diplomats here, your boys. Today, we're talking to you about a dividend king that's showing signs of undervaluation. Buckle up, everybody. Get ready. We are going to talk to everybody about a nice, fun, great dividend growth stock.
Bet yourself right there, Burke, because guys, we're almost at 15,000 subscribers. So please hit that subscribe button if you haven't done so already. Definitely give this video a nice thumbs up because we are talking about a dividend, not just a dividend aristocrat, but a dividend king. Big update. This is Bert's pride and joy. He has raised this dividend stock for years now, and it's time to bring it back on the table to see what they're looking like.
Yeah, everybody. I saw some commenters ask me what happens when my hat's backwards. That means I'm not messing around today. We're looking at the stock. We're hunting it down. We're serious here. Lanny,
it's Bert Ketchum over there.
Yeah, that's exactly right. Get my Pokeballs, just throw them, just start tossing them darts over here. But you mentioned it. So you know what, Lanny? This time, let's not wait for a few minutes to talk about the stock. Let's just rip the Band-Aid off here. Johnson and Johnson. Ticker symbol JNJ. Why are we talking about Johnson & Johnson today? It was actually a pretty busy week in the headlines for the dividend king. On a different note, before we dump into what happened, everybody should know this by now. My wife and I have been adding one share of Johnson & Johnson every single week for over a year and a half now. We did an update video a few months ago, talking about our position, where it's growing. You know what? We've set the goal. We're going to each get to 100 shares each. So we're recording this on August 13th, 2022. My wife and I each own 85 shares and change of Johnson & Johnson from that dividend reinvestment over the last year and a half. So, of course, when Johnson & Johnson's in the news and there are major stories that could potentially impact the company's performance, you know my wife and I are going to be watching it like a hawk.
You're right, Bert, especially when J&J, they dropped over $6 a share this past week, wrapping up here on August 12th, trading at $165, down 3.5%. The best part about them being down 3.5%, Bert, we know, the investing community knows, J&J is down 3.5%, but the stock market itself, the S&P 500, was up almost 3% for the week.
Yeah, and that's really what jumped on my radar. It was a relatively quiet investing week for me over the last few weeks. I was looking for positions to buy just to add something by the end of the week after our first purchase. And you know what? We saw it was down. We saw it was beaten down. Everyone in the market was going up. Everybody was getting, you seeing green. Everyone's positions were great. And then you saw good old Johnson & Johnson, old reliable, was just like the kid that didn't get a dessert that was just sitting there on the step by itself last week. So you know what? I gave Johnson & Johnson some ice cream. I threw in an extra share each for my wife and I this week. So we bought 2 shares of Johnson & Johnson. But this isn't a purchase video. This is not a purchase video. So let's look at some of the stuff, some of the news that was impacting Johnson & Johnson. And then, of course, we're going to run them through the Dividend Diplomats dividend stock screener after. So what were some of the headwinds? There were some headwinds. There were some tailwinds here for Johnson & Johnson over the last few weeks that have caused the price to go up. Let's start with the good news, because everyone wants to hear the good news first, right, Lanny?
Let's talk about, you can kind of call it good news, but I'm sure you're about to dive in. We're bringing back COVID-19 to the table, aren't we, Bert?
We are, and sure, the CDC is relaxing some of the guidances, but there's still talk about another booster coming into the fall. That's what helped J&J and so many others over the last few years with the revenue that came from the initial round of COVID boosters. So obviously, there's going to be another set of boosters available. Johnson & Johnson is surely going to benefit. So you're going to see a nice revenue and income pickup there for Johnson & Johnson. That's a huge plus for the company and their cash flow going forward.
Yep, definitely. And then on top of that, Bert, I know you dove into these headlines, you dove into the articles. One of the competitor drugs, Zantac, is going through a lawsuit. So J&J offers obviously something opposite of Zantac. They have their Pepcid.
Yep, that's right. Yeah,
there you go. So that could be very good news for J&J if Zantac is no longer going to be used, or if users are refusing to use Zantac and they're trending towards the Pepcid.
And unfortunately, Lanny, one of your recent purchases was on the the other side of that one there, GlaxoSmithKline, Sanofi. I think that's how you pronounce it. Correct me if I didn't say that correctly, but yeah, they're in the lawsuits. But Johnson & Johnson's been there before. They've been on this part of the farm industry. I hate to say it's a regular course of business farm. You're going to face lawsuits with your drugs. Some will benefit you when it's your competitors that are getting hit and you have the alternative. Other times, like Johnson & Johnson, you'll see here in our negative news section, is the one that gets their hands slapped, and it's not great news for their financials.
So yeah, the big negative news was the talc powder. So the baby powder is going to stop here. I think, what was it, within the next year and a half, 2 years, Bert?
Yep, yeah, that's right there. So they've already stopped selling it in the United States and Canada. I think they stopped that in 2020 as a result of some of the lawsuits. They just scrapped that altogether. So globally, no more talc powder is going to be sent worldwide. They're replacing it though. They do have an alternative. They're much healthier option there. So that will get rolled out soon. It'll take some time, but that was one of the big things there. That's one of the reasons everyone's kind of been waiting to see what's going to happen here. They're ending it. All done. There's still some lawsuit news, but hey, that's done. It's over.
And that's what sent the stock price dropping for the week. Again, down $6, hitting $165.30. As Bert said, to him and his wife bought it on Monday, and they also grabbed a couple more shares on Friday, grabbing it at hopefully around their lowest point, essentially.
Yeah, and there was actually one other interesting thing as I was like pulling in some of the news here for the week that I didn't realize, but I should have thought about much earlier in the week. Obviously, with Congress passing the new Inflation Reduction Act, there's the big healthcare component of it. Medicare is going to be able to negotiate drug prices, which is great. It's going to be great for the front end, the people that are paying for the drug prices. Shareholders of Johnson & Johnson, Merck, and some of the others are not as great. And I saw this on Seeking Alpha. I thought it was pretty interesting. We're going to put the chart up here. Johnson & Johnson has 3 of the top 10 drugs in Medicare Part D that money was spent on there. So over $9 billion was spent from Medicare on Johnson & Johnson drugs. If you're going to be renegotiating pricing and Medicare is going to be able to push the cost down, obviously that's going to be a revenue hit to Johnson & Johnson there too. So going forward, they have some exposure to the Inflation Reduction Act. So it's another major headwind facing the company. So the 2 big headwinds, just to summarize here, talc powder gone, Medicare is going to take a bite out of their future revenues.
Hey, but that's okay, because as dividend investors, we turn out the noise and you keep buying stocks like this Dividend King, no matter what, because this is not the first headwind. This is not the first health reform, inflation bill here. This is not the first time J&J has done it. Why? Because they've increased their dividend for almost 60 years, guys. They've been here. They've put it to the test already before. They are a phenomenally well-run company, good, old, reliable for a reason, Bert. Bert, do you want to dive into the stock metrics now through the Dividend Diplomat Stock Screener to see if this is still a great stock to buy right now?
Absolutely. And just as a refresher to everybody, Metric 1, PE ratio less than the S&P 500. Metric 2, payout ratio less than 60%. Metric 3, history of increasing dividends. And then metric 4, that bonus metric, is the dividend yield. So yeah, let's run in there. Close prices, August 12th. Keep that in mind as we're going here. And that's what we're talking about. Johnson & Johnson closed at $165.30. Their forward EPS, $10.07. PE ratio, 16.42. So below the S&P 500. And we always joke, Lanny, about Johnson & Johnson's PE ratio. We call it old reliable because there's a range that Johnson & Johnson's PE ratio always seems to kind of hover in. On the low end, 16x, high end, 18x. It just always somehow finds a way to stick in that range. In bull markets, bear markets, it doesn't matter.
Buying J&J, never a bad bet here, guys. So to dive into that second metric, that dividend payout ratio, they pay out in the total of, over the course of a year, spread out over 4 quarters. But in total, they pay $4.52 per share per year. That equates to an extremely safe dividend payout ratio. In fact, it's in our perfect payout ratio range, which is between 40 and 60%. They're at 44.89%, which means they reinvest back in the business to continue to develop new drugs, new research and development, obviously to put out new products to stay, ahead of what the competition is doing. And, they pay out a little less than half back to their shareholders. Definitely safe.
Moving into that third metric here, that dividend growth history. You mentioned they're a dividend king, how they've increased that dividend for 59 consecutive years. Their 5-year dividend growth rate is 5.87%.
Then obviously, after that dividend growth, we look at the dividend yield as a little bonus, a little cherry on the top, guys. And because the stock price is down and they've increased their dividend, what was it, back in April, Bert?
Yep.
So now that dividend yield, based on that share price of 165.30, is not only back above 2.6%, because it was in the 2.4, 2.5 range for a while. It's above 2.7%. It's at 2.73%.
Insane. It's insane to see it above 2.7%. That's why Johnson & Johnson pops on our radar. So to summarize, PE ratio 16.42, payout ratio 44.89%, 5-year dividend growth rate 5.87%. They've increased that dividend for 59 years. The yield is currently 2.73%. Lanny, one quick thing. We've gone through some of these metrics. Can we toss the balance sheet over too? You want to run through some quick balance sheet metrics, just take a look at Johnson & Johnson's debt?
Yeah, of course, during, recession times or inflationary times, it's always smart to also look at the balance sheet. You should be looking at it anyways, but again, even more so right now. The current ratio, so taking current assets over the current liabilities, they're standing pretty liquid. At current ratios at 1.4 times. So they're able to pay not only their current obligations once over, but over, 140% of their current obligations. On top of that, as a component of debt to equity, debt to equity is below 0.5 at 0.43. In this case, the lower, the better.
Yeah. So, I mean, the balance sheet's looking great too, in addition to all the other metrics. And one other thing to note with Johnson & Johnson, they're getting ready to do their spinoff. We've talked about it before. They're splitting up the medical division and the farm division here. So it's going to be interesting to see. That's taking time. But I think this new consumer health division, what's going to be so fascinating, we always talk about how great Johnson & Johnson brands are. They're going to have some behemoths that are going in this new division too. The article I found that was talking about it, they said they labeled it as $1 billion mega brands, or there are going to be 4 of them that are in this. Yeah, exactly. $1 billion mega brand. So yeah, I mean, you're going to have Band-Aid, Tylenol, Neutrogena, Listerine, and all of their other major brands making its own division. It's going to be fascinating to see how that impacts them, their cash flows, and what's going to happen to this dividend king, and how they're going to split the two companies up, but still maintain their dividend king status by seeing the dividend increase amongst the two divisions.
Guys, exactly. A lot of news, a lot of headwinds, a lot of positives, some negatives, but in the end, dividend king J&J is a dividend stock that you just keep buying when you're at these values. I know, Bert, you guys said you're at about 85 shares each.
Yeah, we are, and we want to get to 100, and then we're going to stop, reevaluate, and see if there's another stock, another fund we want to possibly put our money in, or how we want to proceed. But in times where the market's showing green signs, it's bull run for the stock market. This one's an easy picking. This is low hanging fruit to me, where other stocks look overvalued and I want to put cash to work. Why not keep adding Johnson & Johnson at these values while they're lagging for the week? It literally is. That's low hanging fruit. Just grab it. Okay, sure. One more share of J&J. I'll never complain at this value.
So the question is are you guys buying Johnson & Johnson stock? Are you adding to your position at the price of 165 now? Are you loving that the yield is above 2.7%? Let us know in the comments if you're a big J&J dividend stock fan.
If you haven't already, subscribe to our channel. Give this video a thumbs up. Let's go, everybody. Get us to 15K, 16, and then eventually 20,000 subscribers. So Hulk Lanny, Macho Bert can come back and make another appearance.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.